Financial Argument. Follow us on YouTube.
I have a special guest for you guys today. He's been in the financial industry for a long time, specifically educating exactly people like us, people like you that are listening right now. You want to do some investing on your own, and you're looking for that guide. And our guest today is that perfect guide for you. He is the host of the New Orleans Investment Conference, top investment conference of the year. Everybody should definitely put that on their calendar in October. He is the CEO of Jefferson Financial, and he's also the editor of the Gold Newsletter, which you can find at goldnewsletter.com. Our guest, of course, today is BRIEN LUNDIN. BRIEN, thanks for joining us.
Great to be with you, Daniel.
Well, BRIEN, it's great to be with you. What I do is something I've done for, let's say, 6-7 years. You've done this for a few decades, so I always look forward to speaking with you. And I wanted to start off today with just kind of an overview of the markets, because I think everybody's kind of scratching their heads. The Dow refuses to not make an all-time high, despite it doesn't matter what the news is. It doesn't matter what's going on in the economy. It doesn't matter that you've got a crazy man over there in Korea who could set off a nuclear war or radiation issues across the entire northern hemisphere. Markets just won't stop going up. So what are your current thoughts on the overall general equities?
Well, it's important to remember that the stock market is already at record highs. So you constantly hear these headlines or see these headlines on a daily basis that Dow sets a new record high. Well, all it has to do is rise 1 point and it sets a new record high. So it's really a meaningless headline, a meaningless statistic. Importantly, the breadth of the broader U.S. stock market is weakening in that there are fewer companies at their 52-week highs. It's being supported by some of the major stocks, some of the FANGs, some of the Dow stocks in particular. And there's a growing number of stocks that are actually at their 52-week lows. So the breadth is not supporting this latest move. With that said, the stock market keeps going up, as you mentioned, regardless of what happens in the broader world. But I think what we need to look at is the fact that there are undercurrents in the economy, but also geopolitically, that put the whole house of cards in danger. As you mentioned, there's North Korea. There's also an underlying level of concern, kind of an undercurrent of worry that's been supporting gold much of this year. That's really due more or less to Donald Trump. He's managed to take these short-term geopolitical flashpoints and transform them into, a almost daily tweet barrage in a rising tide of concern around the world. That's resulted in a strong level of demand for gold. In addition to that, we do have these issues like North Korea that I think are very real, and will be coming now and then in waves upon the beach, as it were. We'll have these major geopolitical crises coming in. I don't like those, though, for gold investing. I don't recommend that investors buy gold based on these geopolitical issues because they come and go so quickly. We're seeing that with North Korea right now, in fact.
Okay, so cyclically, though, with gold specifically, I was lucky enough to actually be at the New Orleans Investment Conference in October of 2015. It was essentially, that was the end of the bear market. The majors had already started their run in September, and there was already there was a few companies that you and I were both investing in that had already started to make their moves going back to the spring of 2015. So, where are we in this cycle right now? Because I think a lot of people, after going through 4 or 5 years of nothing but pain, they thought 2016 would not be so short-lived, right? So it was like basically from February to, let's say, July or August, it was like, man, it was a party. And then we went into this correction, which was expected and definitely due. But here we are a year later. And the equities, not just the shares, but the gold mining shares and the metals themselves have gold investors a little uneasy. What are your thoughts on the current gold market and as well as the mining share market?
Well, I think it's important for investors to realize that gold is in a bull market. The long bear market of 2011, July of 2011, ended in December of 2015. So that was about 4.5 years of really the worst bear market in ever seen in this sector. So that ended in gold in December of 2015, and the market has been going higher in a general sense since then, in kind of a stair-step fashion. We did have a deep correction toward the end of 2016 after the presidential election in particular, as investors really jumped onto the equities train and decided that all of these great economic policies that Donald Trump would bring in would boost U.S. economic growth. I don't think that was ill-founded faith if, in fact, Donald Trump would be able to employ those policies, but he's only been able to do it in very limited fashion with regulatory rollbacks. Since then, we've had gold go up in kind of a stair-step fashion as we've seen the Federal Reserve hesitate on rate hikes, as there's been a growing perception that an understanding that the Federal Reserve will never be able to get ahead of inflation with its rate hikes, that interest rates will now and seemingly forevermore be at very low levels, if not negative levels, on a real basis. So that supported gold. But one of the things I really find interesting of this year and of gold's performance this year is that there haven't been any real important, fundamental, secular factors driving the gold market. And in fact, there have been technical indications of weakness in gold, or that would forecast weakness in gold. Yet gold keeps finding a reason or a way to rise and to resist serious corrections. And that is really the hallmark of a bull market mentality. When a market, when an asset finds a reason to rise rather than an excuse to fall, then it's in a bull market. And that's what's been happening with gold. And I don't know whether gold is sensing an economic weakness ahead, is reflecting a general sense of unease geopolitically out there. But the fact remains that gold responds to any factor that can be reasonably interpreted as being bullish. So I think, despite the fact that we've seen in recent days, really the lowering of tensions with North Korea and a fallback in gold, with the metal giving up some of those recent gains on the North Korea crisis, I think that we're in good stead with gold going into the last half of the summer and into the fall.
How about the mining shares? What are you telling your subscribers right now? Do you have a preference of what type of mining stocks to buy right now?
Absolutely. I think exploration plays are where. I mean, there are a lot of interesting areas: lithium, cobalt. There's a lot of excitement in general areas of general metals and areas of the world. But in general, what we've seen is that because of the rebound in 2016, a lot of these companies were able to refill their coffers. They were able to raise money, get their treasuries back in shape, and begin work on prospects, some very exciting prospects that had essentially lain fallow over the previous 4.5 years. So that preliminary work being done this summer has seen a flurry of actual drilling activity on some very exciting targets. And we've seen some discoveries come out. I think there'll be more. I think this is the season of discovery for the junior resource stocks, in particular in gold. So I've been recommending a number of these companies to my readers in Gold Newsletter. GT Gold was one very exciting one that I practically begged our readers to buy in advance of those drill holes, and that's worked out very well. And in particular, I think the Golden Triangle is proving to be a very fertile ground for new discoveries, and there are more on the way.
Yeah, so people who have gold investments or a gold portfolio of a basket of, let's say, mining shares, outside of that, what are some other good things that we should be looking at? You mentioned lithium and cobalt. I mean, what are some of your other commodities, or even if they're non commodities, what are some of the other things that you're looking at for investments?
Well, another area that's been interesting is zinc and copper, and there haven't been really any strong indications of renewed economic growth anywhere in the world. Yet we've seen rebounds in zinc and copper recently, particularly in zinc for reasons of supply and demand. But copper is very interesting to me, and it's always been referred to as Dr. Copper. It has a PhD in economics, that it responds to signs of economic growth. Over the last 20 years or so, that's been it has particularly responded to growth in the Chinese economy. So that recent spurt in copper has me very interested, and I think there are some copper plays out there. There's some zinc copper plays, and of course there are a number of companies that have copper gold projects that are very exciting and should benefit from this, or continue to benefit.
Brian, you've had at the New Orleans Investment Conference some of the top political names in the country, and I just wanted to get your opinion on today's environment in D.C. and if there's any optimism we should have when it comes to perhaps a resurgence in jobs or anything like that. And let me just give a little. Just an insight from our mutual friend Amir Adnani, actually. Amir was in D.C., I think 4 weeks ago, and he said he sat down with Rick Perry and then the head of the EPA. And he was telling me, I mean, Amir left there he goes, Dan, you don't understand. Like these guys have such a strong mandate, like he's never seen before, to like repeal regulations and fast track these companies. So with that said, are you seeing I know you mentioned Trump was able to do something about the regulatory environment, but having struggling in the legislating side. What are your feelings and overall thoughts of the Trump administration and this idea that the U.S. could somehow grow its way out of its problems?
Well, it's impossible mathematically for the U.S. economy to grow its way out of the debt burden that's already been accumulated. So that's going to demand some level of depreciation in the U.S. dollar. The currency has to be depreciated to lower the effects and the costs of that debt burden. It's something that's happened throughout 4,000 years of human history, and it's going to happen again. It's inevitable and it's irreversible at this point. But in the short term, economic growth, of course, has tremendous impact on equities, on metals, particularly base metals, et cetera. And I do think that the Trump administration has done wonders on the regulatory standpoint, from the regulatory standpoint, and will continue to do so. It's in the major legislative arena that they're having tremendous troubles right now. I think that they will be able to do some work on tax reform. However, to really do good work on tax reform, they needed the savings that they were going to get from healthcare reform. So I don't think the tax reform proposals will be anything like what was originally proposed and what is actually needed to get the economy really going again. So I'm really not that optimistic as some people may be on the U.S. economy going forward. And in light of that, I think there's a very significant risk that the U.S. economy could ease back into recession, or at least growth decelerate enough to keep the Fed out of its anticipated slope of rate hikes. So that there is a chance, a very real chance, that the Fed will not be able to continue to raise rates and may actually have to revert to easing at some point. If that happens, then the gold price will rise hundreds of dollars per ounce very quickly. And that's the kind of potential for gold investors and risk for the broader economy that I don't think is being widely recognized.
Yeah, and I know you have several contacts in D.C. Just from your talks with them and what your own thoughts are. Trump and the Congress, are you surprised that they're not able to achieve some of these big things that I think many people thought because they had the majority? But I guess I could phrase the question this way: is Trump dealing with a Republican Congress, or is it a fractioned party? And same vice versa, is the Republican Congress dealing with a Republican president?
Well, it isn't as homogenous of a group as people had imagined, and the question is why didn't they have, after 7 years, why didn't the Republicans have a health care plan already buttoned down and agreed upon by all these different factions? And there's really two reasons. One is, as soon as you put out a detailed plan, then you hand your opposition a stick to beat you with. And so they didn't want to do that to have something that the opposition, the Democrats, could attack for years and years. And the other reason is because they just simply couldn't do it. There wasn't a consensus, a broad consensus among the Republicans to do anything. So they kept these plans on quiet and sub rosa for all these years, and then tried to build a consensus and weren't able to do it. So it's not as simple as a numbers game. There are some people out there, enough people, interestingly, one more than is necessary, to prevent any agreement on health care. And that's a major loss. And what we're seeing now is that Donald Trump's influence is waning. So he's not, whatever power he had to persuade is falling by the wayside. And unless he can really score a big victory in tax reform, then I think his power and influence will dramatically diminish and will go into midterm elections with a very real risk that the Republican majorities will either vanish completely or decrease significantly.
Yeah, if they can't even pass taxes, that will put Republican voters into depression. Brian, at the New Orleans Investment Conference, what are the dates and who are some of the headliners you can mention?
Well, we're having a wonderful event this year. It's going to be a big year. We're getting a lot of excitement, a lot of attention from companies and attendees. So we're very excited about what we're bringing forth this year. It's October 25th to the 28th, so it's coming up quickly. And we have our usual spate of headliners that you won't find at any other event. We have Tucker Carlson, who's the latest Fox firebrand, who is very popular, wildly popular.
Love him.
Yeah, it's amazing how he gets these guests on his show, that how they line up to be on his show and just get skewered by his
logic. His logic, yeah.
It's just a wonder to see, and he's promised to say things that at our event, like most of our speakers do, that they can't say on television. It's a very intimate, closed-door event, and you really get to know these people, really get to get analyses that are cold, hard, blunt, and not anything you'll see broadcast nationally. In that vein, we have Charles Krauthammer, who's extremely popular with our attendees, and one of the reasons why is because he loves our show and loves our audiences. He gets off the stage and he goes out in the foyer area and he talks to people. He mingles with them, takes pictures, and it's amazing to see his interaction with our attendees. Plus, he's very relaxed on stage. He's not this somewhat stiff persona you see on television. He is one of those people who can really loosen up and does loosen up and share things with the audience that you won't hear elsewhere. We're also very excited this year to have Robert Kiyosaki aboard as one of our speakers. He has an enormous audience. He focuses on self-help and wealth creation primarily through real estate investing, but he's also an ardent gold bug. A lot of people don't realize that. He's very much in favor of buying precious metals and in mining stocks, speculating in the area, but also preserving wealth through precious metals. And one of the things I like about Robert is he says he's very excited about the conference because he wants to sit out in the audience and take notes. He's that impressed with our roster of speakers and really is looking at it as a learning experience. And as you know, this guy's a master, so that says a lot about our roster.
Those three alone, great lineup. Robert Kiyosaki, I've always credited him publicly with pretty much that's the guy who took all my thoughts as a teenager, and it was like in a book laid out. I was like, perfect. This resistance I had towards conventional wisdom. And then I read his book actually before Rich Dad Poor Dad. He had another book called Want to Be Rich and Happy, Don't Go to School. And of course, as a 13-year-old who didn't want to go to school, I was like, this seems like a good book to read. So anyway, Brian Lundin he's the CEO of Jefferson Financial. You can subscribe to his letter at goldnewsletter.com. And everyone, check out the New Orleans Investment Conference. You're going to have top names. I'm sure a lot of the names that Brian didn't mention, many people are fans of. I would expect to see, I'm assuming Rick Rule would be there.
Oh, yeah. Rick Rule, Doug Casey, Peter Schiff, Dennis Gartman, Jonah Goldberg, Judy Shelton, who's probably going to be on the Federal Reserve Board at some point, an avid gold bug. All of the best and brightest newsletter writers in the metals and mining shares and resource industries. The list goes on and on and on. So please come to our website. NewOrleansConference.com has the list of all of our speakers this year, and it's, as I said, a very exciting agenda.
Yeah, guys, don't miss the show. By the way, you can step out of the show and you can eat like a king in New Orleans. And they've got, of course, the strip. I can't even think of what it's called, but it's very fun and entertaining, certainly, especially in the evenings. Bourbon Street, there it is. Okay, so in Austin, we have 6th Street. It's kind of like our little mini Bourbon Street. So, all right.